Hi, everybody. It's Stephanie Thomas again.
And this is Mary Thomas.
Of Thomas and Thomas PC, also known as the Sales Tax Sisters. And we are going to talk about an exciting topic today: economic nexus versus physical nexus.
So this is the first video in our series as it relates to Nexus and sales tax.
And I think they need to know what nexus is.
That was the jumping off point.
Yeah, go ahead.
So, in a nutshell, what Nexus is do you have enough contact with the state or with the jurisdiction that they can require you to register to collect use tax from your customers in that jurisdiction? For instance, it used to be, let me back up. It used to be that states could only get you to register if you had a physical presence in the state. That's what's called physical nexus. So if you had your headquarters, obviously, if you have your headquarters in the state, you had a location in the state, you had inventory, employees, vehicles, independent contractors, agents, that state could say, hey, you know what? You're here. You're physically here. That means that whenever you make a sale to somebody in this place, you need to be collecting sales or use tax.
If it's a
taxable item or service.
Yes. So, for example, if you are in construction and you always have nexus in the jurisdiction that you're actually building things in because you have people there. That means you always have nexus there. That's a simple example that I think pretty much everybody can follow.
Yes, and another easy one is that if you have trucks going somewhere, then you have physical presence. I want to preface this by saying that companies have lots of different ways and permutations of doing things. What you need to do is, depending on what your company does, where you're working, if you think that you may have nexus somewhere, you need to really look at that state's rules for a nexus, because what we're doing is we're providing you with a general guideline, a general kind of tip thing for to tickle your brain to say, hey, maybe this is something I need to look into. This is not specific legal advice for anybody because we don't know where you are.
Exactly.
We don't know where you are. We don't know where you are. We don't know what you do. And those things really do make a difference. And there are all kinds of permutations. There are some states that don't levy a sales and use tax. So obviously this wouldn't be something that would apply to them. So this is just a starting point. And that's a very important thing for you guys to kind of wrap around. But we talked about physical nexus. Physical nexus is, for some reason, you're deemed to be there on the ground.
You have a presence.
You have a presence. You need to register. Now, there's another thing, and this is so popular. Everybody wants to know about the Wayfair case. I think it's fabulous everybody knows about most people know about the Wayfair case. A couple years ago, Wayfair had this case where they challenged, I think it was South Dakota's right to make them register there to collect use tax because they weren't there. And when I say use tax, what I'm talking about is when you make a sale of a taxable item, be it a product or a service, if everybody is in the same place, it's sales tax. But if you have a situation where, everybody's not in the same place, it's a remote sale, meaning you're in Houston and this person is in LA, then what's going to happen is that, and you're shipping, they bought it from you online, you're shipping it to California immediately. They're not coming to Texas to get that from you. Then what's going to happen is that it's not going to be subject to Texas sales tax if they don't have a presence in Texas. Very important. If they don't have a presence in Texas, and I'm going down into a rabbit hole as it relates to services and products, which I don't want to do. So I'm backing this back up. So we're saying that they bought a product from you that was shipped to California. You're not going to charge them Texas sales tax on it. It's going to be subject to California use tax. If you're not registered in California to collect that tax. You can't do it because you wouldn't have an apparatus to give California the money. So what states have, and it would be up to that client, whoever bought it, to put it on their return and submit the money to the state. And what states realized is they were bleeding on these transactions because, you know, maybe this person in California did not put that on their return and turn it in, and the state wouldn't know about that transaction. So what they've done is the Supreme Court basically came down and said, hey, you know what? We're going to give states the power to make people register if they have a certain level of activity that is attributed to that state. So what states did is, and there's this whole universe of different permutations of what states did. But most of them came down with rules that said, if you have over so many dollars worth of sales to our constituents, or so many number of transactions, or a mix of both, we're going to require you to register. And so there are all kinds of rules. You have to look it up for each state, for each pertinent state. Some states have you measure it once a year. Some states have you measure it every month.
So just like with sales tax and taxability, it varies from jurisdiction to jurisdiction. So it is up to you as a savvy business owner to figure out where you may have economic nexus. And this is what she's talking about. Economic nexus versus physical nexus. Physical nexus is where you have a physical presence in a jurisdiction. Economic nexus is based on a number of factors, including the number of sales you may have into a jurisdiction, or the value of the sales that you have, or both. Exactly. It all depends on the jurisdiction. So that is a big distinction that a lot of people need to know about.
So that's the thing, is that I get a lot of people who don't understand. You can have physical nexus, economic nexus, or both. It really doesn't matter. When you have one, you need to register. And we're going to talk about voluntary registrations later. There are some companies that do voluntarily register when they don't have Nexus, and there are reasons that some folks do that. So you're going to want to kind of we're going to put that off to the side right now. But the goal of this was, I wanted you to understand what Nexus is. Nexus is you got enough contact with the jurisdiction so that you have to register. What physical Nexus is, you got something on the ground. You got something plopped down.
A physical presence.
A physical presence. And versus what economic nexus is, you making bank. You making money. You got enough.
You're making sales.
Yes.
The volume of sales, the number of sales, that might kick you into a category where you have to register in that taxing jurisdiction to collect the appropriate taxes.
And the fact that once you get any kind of nexus, you probably need to register, and then number 5, you need to be looking at the rules of all the jurisdictions in which you think you may have an issue. Quantify your sales. Look at what their apparatus is for what they want you to do to calculate what it is you need to do to register. Okay?
Exactly.
So that is our first foray into our Nexus series. Let us know if you have questions. If you like the video, please thumb it up. If you have any questions, seriously, let us know, because I know a lot of people kind of trip up on this, and it's very important that you not trip up on it, because it's something that can be a headache later on if you do.
Yeah, and if you haven't already, subscribe.
Exactly. And so with that, we're over and out. Thanks, guys. We'll see you next time.
Bye.
Happy New Year.
Yes, bye.
Bye-bye.